Well, high tight flag. Obviously, this is a lot of fans out there of high tight flags, including myself, as O'Neill pattern or idea, where you kind of go up 100% or more in 8 weeks or less, make a 3 to 5 week flag, and then break out. I'm looking for a tight area, kind of low volume spot inside day turn here, and trying to buy that coming out. This initial run, I did play that a little bit and sold some and stopped out. And revisit. You got to be able to revisit. You got to have persistence. Just because you were sort of right and wrong, I guess making a little profit and right and wrong at the same time, doesn't mean you should just put it away. This is the textbook high tight flag to me. I have to trade it, and then at the end, the news really is the thing to move it. So it was maybe just waiting more for the news, or somebody knew about the news, or whatever's holding this together. I have no idea. I'm just trying to get a piece of it on the end of the space here as it's coming out. And our profit targets are around 20%. So we got some off at 21% here. So obviously you can't put your whole account in this, because, it could have any biotech news, but, have some size in it. And it's helping the account. So, and you're going to have your losers. So you got to book that. We're taking the profit there. It could just tank or something, but this could be on its way to $30. This sort of that $15 range is the ideal sort of high tight flag spot for me. I'd rather this be in a new NVIDIA or something like that, or new technology than biotech, because I'm not a biotech expert, so I can only size up so much in it. Otherwise, I'm going to kick myself when it blows up on me and there's some study that comes out and it negates the whole idea. So slower to take profits there. And on that idea is kind of going back to NVIDIA. NVIDIA, kind of a very deep base, but a lot of power coming up off the lows, showing that it's sort of this low tight flag idea that I have, where you're not quite a high tight flag, so you need a little more time. And if you can correct less than 15%, which is preferred, then I'd probably trade it. You get about 6 to 8 weeks, so more time than a high tight flag. 3 to 5 weeks on a high tight flag. So this needs to base a little bit longer. But like I said, the RS line was declining. This was rising. So this next base, I had this on my breakout watch lists and stuff, in here. And then going into earnings, it looks like, of course, it's going to go up, but it could have easily gone down too. So yeah, I would have sized down into earnings anyway here and wouldn't have had that big of a gain. But this is a nice jump. So I'd probably sell into that and wait for the next base to add back. So more of the low tight flag. This was 2021. So you can see sort of that initial run, that little pop there in the middle in December. It's a little early. So that's the thing. It's not a high tight flag. So to me, it looks like traders almost treating it like a high tight flag, but it's, you have to do the math. It's not 100% rise. So they did the research, you need that more time. So on the end of that, that's where I'm getting in, kind of that 6 to 8 week base. And I don't mind a false run or a shakeout. It got tight enough, and the average true range kind of actually shows this was tighter. I don't have it on the chart. That's why I use it. This looks a little bouncy to me, but we looked for sort of a 3-day little pivot there, got in and sold some into strength. But eventually this did round trip and stuff. But this is why, like for ABGO, this is why I would sell into that, because this totally round tripped, and then I'm stuck holding the bag. I definitely don't want to take a loss. You can't take a loss on a big winner, so you have to be selling into strength and moving up your stops at the very least. So that's the low tight flag. And the other thing, I just call it a rocket base. I'm trying to make the case that I invented it's just a regular base up high tight flag power, but it pulled back more than a high tight flag, because I just want to trade around these. So you just have your normal cup and handle base. I'm trying to fish a low, find a low volume spot, some kind of a turnover prior day's high, however you want to do it. And that's a tough one, but you're stopping at the low there at least. So you're seeing if that's going to turn back up. And with that kind of power, it could totally round trip, but it looks like it's on its way and trending. So you have your ad spots, and it's a pretty good mover. And these biotechs have been doing great actually. So that's why I have a little piece of XBI, and ETFs you can do a lot bigger than one of these names, because of they're not, XBI is not going to put out a study on XBI. It's just maybe 1 or 2 of the holdings are going to blow up, but some can go to the upside, right? So you have your big winners and your big losers, but overall, what's the trend? And now that the KRE might be, and some banking issues might be getting resolved, these smaller biotechs might start to have less funding concerns and being able to raise more money and such. And that stage 2 trend, we're starting to put a little bit of common sense to it. I like to work with sort of engineers like yourself, Richard, but I try to go and connect all the smart stuff together, right? That's what we're trying to do, connect all the dots here, all the methods and such. And but we don't buy extended. So this is not a low tight flag. This is not a high tight flag, not a rocket base. Sort of like a 50% rise in 8 weeks, or in it's the rise in 2 months is 50% or so or less. So that's just a strong move and needs a new base. So that's how you get from one basing area to the next, sort of like they did before here. You're moving out of this kind of area in October, kind of basing again, and then you could probably buy that off the 50-day, and then that's over 8 weeks or so, and then another base, 8-week base. So that's what we're looking for. We're looking for like another one of these bases, just to make it simple. You can kind of imagine it's kind of base on top of base on top of base sort of here. So we're looking for another base. Don't make it complicated. And this could top out. This is kind of a big move. So, RS rating, RS line sort of pulling in there. And we'll see. But, just look to reattack it 6 to 8 weeks. Keep your account intact for the good setups. And you'll get all chopped up, in my opinion, having no system buying any little flag. I mean, I can't do that. So I got to stick to, proper bases, and then they're all here. There's several bases right on the chart. No reason to get crazy with the short little flags and all that. But, you can read it in the bigger time frames and see how it all looks. I do like looking at maybe there's an inverse head and shoulders within the next base in 6 to 8 weeks. Then I'll put better odds on it. You use a little chart pattern. How tight does it look? There's a volume drying up. Is a price being accepted? What's the group doing? And start drawing all those lines together, as we're sort of trying to do in this presentation. But there's so much more than what I have on here to figure out. But this is just a starting point to sort of go to your buy and say, okay, these are the things that are starting to make sense about this trade. It's getting tight, setting up, the group's setting up. There's power there potentially. It's a fast mover. The group's doing good. Stage 2 uptrend. On and on and on. And then you're layering your odds on, it's odds on top of odds. And so you're just going to get a stop anyway sometimes, but that means you pull back, right? And then, we're playing for these moves for the next bases. And if things start going wrong because the market rolls over for whatever reason, then you're pulling back and you're not being aggressive with these tactics. The tactics change as you become wrong. You have to sort of pull back, and if you're going the wrong areas and such.